Hi there, Tamara Doris, your Sacramento real estate professional. And this video today is for sellers who are short selling their home. And I want to talk a little bit about second lien holders. And I know I have before, but it just bears repeating because I have so many people who are surprised when I say you may have to pay a promissory note. You may have to sign and agree to a promissory note. Let me explain. A lot of people borrowed a lot of money when they had a lot of equity, right? So a few years ago, when people had equity in their homes, they were like, crud, we've got 100,000 equity, let's take some of it out. So that means that they now have a second lien holder, right? So they owe two banks money. Well, that's all well and good, except for now when we're in this declining market, and now they owe so much money and their home is not worth as much as they owe. So hence, I walk in and help them do a short sale. Well, we get an offer in on the house. We have to remember that the primary lender, the first lien holder, gets the majority of the money. Now, it's all worked out in the HUD, which is the Housing Urban Development #1 form that your escrow officer will do for you, and it will indicate how much money the second lien holder has. That would be the second bank that you borrowed money from if you did a HELOC, a home equity line of credit, for example. Now, in this case, it depends if it's a half a loan, it depends if it's a government-backed loan and there's insurance on it. It just really depends on what the second lien holder will get awarded to them. But it's certainly not going to be the whole amount, I can tell you that right now. So essentially what they're looking at, and I'll just off the top of my head, if you owe Bank of America $50,000, we may give them $3,000. And that's great, but there will be some lien holders who will want about 10%. So if you owe $50,000 on the second to a lender, and they may ask you to pay $5,000 of that in a promissory note. Well, at first you're saying, I'm not going to pay $5,000 to this lender. I want to walk away. I want a clean start. Okay, but keep in mind that what we could negotiate for you is instead of $50,000, you could sign a promissory note for $5,000 at 0 to 3% interest over a 10 or 20 year period. That's not so bad. What is the alternative? The alternative is to just walk away and then have that lender come after you for the whole $50,000. Forget the $5,000. Now we're talking about $50,000. Not a good thing. There's a few options, and I encourage, and I have reference to a couple of good bankruptcy attorneys, CPAs. I encourage you to educate yourself. Don't just listen to me, and please don't listen to just whatever you read in the media. It's really, really important that you become fully educated and you understand what you're doing, because this is your life. This is your life savings, perhaps. This is your asset of your home. This is your credit. This is your capacity to buy a home in 2 years or 6 months or 5 years or never. So it's really, really important that you're fully educated. And I will answer any questions I can to help you. I kind of fancy myself being pretty educated in the California real estate scene. So give me a call, 916-482-5834, and I hope you have a great day. Thank you.